Gautam Shah is founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thank you very much for your time. You know, January is, if you sort of look at seasonality, etc., and if you're trading, you'd pay attention to that kind of thing, is not a great month, especially not if you're coming off a very, very strong December. Just your thoughts with where we are, Gautam. Are we ending something? Are we in the middle of something? Or are we just about starting something on the upside? What are your broad thoughts? Big thoughts, actually. Go on.
Good morning, Prashant. Well, I don't think we are ending something because I think we've been in this massive uptrend for about 8 years. You know, as your team also highlighted, 8 continuous years of gains. So just tells you that every single correction in the last 8 years have been bought into and the markets have come back every single time. However, as you rightly pointed out, I think the month of January does not have a good track record. In fact, out of all of the months of the year, it probably has the worst track record if you look at the last 25 years. At the same time, if you look at the months of November and December, it usually is a good period and we've had a fabulous November and December. I think a lot of positives are already in the price. In fact, I would even go on to say that exuberance is in the price. So I think the market needs a fresh trigger to do something special even from these levels. We are very, very overbought on the traditional parameters and on the breadth parameters. And obviously, if you add seasonality to it, you know, these are levels where we don't think that the market can continue to gallop. In fact, in the last 10 days, you've had the Nifty stay in a 1.5% band. So 21,500 to 21,800 has worked quite well. And even if 21,800 gets taken out, you could see another 2-3% upside towards 22,200. But I do believe that the market is a little top heavy at this point of time. And the chances of a pullback at some point of time in the next few weeks is very high. So this is a time where one needs to be a little careful. One needs to be low on leverage. One needs to be conservative. And in case 21,500 were to break at any point of time, which I think is going to happen soon, you could see a pullback of about 3-4%, which I think is quite normal given the kind of run-up you saw in the last 2 months.
Chances of a pullback are very high, you're saying, but the market for now is not looking at that. The Nifty is up about 50 odd points. And plenty of stocks actually hitting fresh highs. Olectra Green Tech, you know, a company that has been in the manufacturing of electric buses, has been doing very well. Great returns to shareholders. And that stock is at a fresh high now, 8% higher on Olectra Green Tech. So this market is definitely picking and choosing their winners, as has been the case in the last 6 months. Gautam, hi, good morning. Thanks for joining in. We have a couple of big events upon us, right? There is, of course, the budget. It's a vote on account, but nevertheless, it's an event that the market is looking at. There are the elections coming up. How do you juxtapose the technicals of the market with some of these big fundamental events? Do you think they could be game-changing, or are you still looking at volatility nevertheless?
Well, I don't think they could be game-changing, but definitely these are issues with the market will try to discount on a daily basis. And not just the budget. I think earnings itself, season is upon us. And I think that's also going to impact the markets because, as I said, a lot of the positives are already in the price. So I think I would just want to be a little conservative here. There are still immense opportunities in the market. I don't think today's market can be compared with anything that has happened in the last 20 years because the domestic liquidity angle has just changed the game and the entire framework completely. So I think what you're going to see is rotational correction. So pockets which are very overbought and which have run up a lot will go through its corrections, and pockets which have not done as well will continue to rally. In fact, our favorites in this market would be IT, pharma, metals, and chemicals. So these are the 4 baskets where we are bullish on and we are looking for opportunities. Even the banks, don't look too negative on the charts. I think the way HDFC Bank and SBI are placed, I just feel that the Bank Nifty will be safe, and that would actually lead to the entire market being safe.
All right. Hi, Gautam. Good morning and good to see you and wishing you a cracking 2024, Gautam. Tell us, but if you have to see a bit of a pullback on the headline index, that's on the Nifty, what could the quantum be? Where do you see us taking some bit of support?
I think, as I said, quantum and magnitude has changed quite a bit. Having seen the 2003-2007 bull market, 10% fall was quite normal. But I think in today's world, a 5% is a 10%. So in that sense, if the Nifty were to lose about 4-5% at any point of time, it should be considered normal and very, very healthy. So I think 21,500 for me is the line in the sand. If that were to break on a closing basis, you could see a bit of a dip. I think the only point which I'm trying to make is please do not take adventurous longs. I don't think medium-term and investment longs have any concern because the bull market is intact and you're going to see much higher levels. But in the interim, I think you need to see a little bit of a cool off. So 21,500 and probably 20,500 is the base, because that was the number, which the market tested post the assembly election results. And I think that would now be the most important support, not just for January, but probably for the next couple of months.
Okay. You spoke about how banks could protect the market and prevent it from having this big fall, right? What about IT? We're heading into IT earnings as well, and it's looking tricky this time around. How are you positioned? Which side of the fence are you leaning towards?
Well, I would be positive. And in fact, we have been positive for the last few months now. And I remain of the view that the IT index is heading towards a level of 39,000, which I think is about 10% away from where we are right now. All of the top stocks, I think, look very well placed. Look at the rebound in Infosys and TCS. I do see TCS trading well above 4,000 very, very soon. And mid-cap IT has been a story in itself. I mean, if you look at all the top stocks, there is just no stopping. I mean, look at a Persistent, look at a Emphasis, look at a Coforge, Mastech. All phenomenal moves, and this is going to continue. So with IT and banks actually looking positive on the charts, it just gives me the feeling that maybe you'll not see a collapse, but you'll see a rotational correction in the market among various sectors.
Gautam, last week the Nifty real estate index went up 8%. Stocks like Sobha went up 30%. How is that one looking, and what are the best ideas in that area?
Well, Prashant, we discussed this a year and a half back, when I made the point that there was a breakout from a 10-year range, because post 2008 until 2021, real estate as a sector did absolutely nothing. It was in a big range. So when you have such big breakouts, the ramifications are also large. And that's really what has happened in the last 15, 18 months. Now, I think it's very, very overdone. I think just from a near-term perspective, you might have seen a buying climax, and the chances of a large cool-off is pretty high. So we've been recommending our subscribers to actually take profits in many of these winners in real estate, capital goods, auto, and maybe move to some of the other sectors. Not to say that the uptrend has ended and the bull market has ended. You might get a resting phase in between that could last many weeks, maybe even a few months before the next leg up. So I think this is a buying climax. It should be sold into.
Okay, what about Pharma? Started off 2024 in style. That was a surprise big outperformer last week, real estate as well as Pharma. Do you think this year we could see the Pharma index outperform?
It could be potentially a year for Pharma. I think the structures are good. Many underperforming stocks have done well. I can give you 5 or 6 names. And I do see the Pharma index moving towards a level of 19,000. That's the NSE Pharma index. So there is large upside. And, the risk reward is excellent. Even at current levels, the downside is very limited. Look at the DV's Lab, Dr. Reddy's, Cipla, Zydus Life. Very good setups. And at a 21,700 index, I'm actually very comfortable buying and, holding on to Pharma for greater upside.
Defense has now become mainstream, right? After, lying in the background for many years. So even as we speak, names like, say, BEML, Bharat Forge are all sitting at fresh highs. Do you see further gains in 2024 for the defense names?
I don't think so, Sonia. I think everything is being painted with the same brush. And I think there is just too much extrapolation happening in railway and defense. I do believe that it's very, very overdone. And these are levels where, when you are in gear 5, even a little bit of turbulence is sometimes difficult to handle. So defense, while it might be a great story from a 3 to 5 year perspective, but if you're looking to enter fresh, these are not levels. In fact, if somebody bought in lower levels, take profits.
Okay. Well, all right, we will leave it at that. Thanks a lot, Gautam, for joining in. Appreciate your thoughts and the little bit of caution there in your voice. Let's see how things go from here. For now, very quiet, but Gautam Shah of Goldilocks saying that things may get a bit tricky, some bit of volatility, some pullback is definitely something that's on the horizon.